throughout our little broadcast, feel free to leave them in the comments right here on our Facebook page. With me tonight, I have two expert lenders, Troy and Kim, who are going to be the ones answering your questions. But before we really get started diving into your questions, Troy, why don't you just give us a quick overview? What is debt consolidation? I think there's a lot of people out there who don't quite know what that means.
Sure. Debt consolidation, most of the time people come in and have credit cards or various different debts that seem to be all over the place, and they just want to get it to one spot. So when they come in, most of the time it's panic mode or they're frantic, and we come in and do some sort of loan, whether it's an auto loan or a signature loan, and get everything buttoned into one.
Awesome. Do you have anything you want to kind of add on to that, Kim, to kind of explain what debt consolidation is for somebody who doesn't know what that term means?
Yeah, so debt consolidation, kind of like what Troy said, is credit cards that kind of got out of control that you can't handle, maybe a lot of small payments. We can get into one payment somewhere and a lower interest rate than maybe the other credit card companies that can't handle. And then what Troy was saying as well is getting into an auto loan. So if you have any kind of collateral, we could maybe put it into your car, if you have equity, or sometimes if it's extreme, we can put it into a home equity loan.
Okay. So can you talk a little bit, Kim, what is collateral? I don't think that a lot of people maybe understand what that term means. What's collateral?
Yeah, so collateral would mean anything that has equity or value. So at First Alliance Credit Union, we really like to use anything that has equity. So any type of vehicle, and it doesn't matter the age or the miles anymore, or a boat, or if you have an ATV or a house, anything that has value that doesn't have a lien on it.
Okay, perfect. That makes a lot of sense. So you kind of touched on this a little bit already, but what are some different ways that you can consolidate debt? Troy, do you want to kind of talk about that a little bit?
How you can consolidate debt?
Yeah, what are some options? Like, I think you kind of touched on using some collateral, maybe sort of like a secured loan, but there's maybe other ways to do it as well besides that?
Certainly. So at First Alliance Credit Union, we have what we call signature loans. Those are essentially no collateral, just a handshake loan, I guess is what I call it. They're based off credit score and income, so on and so forth. We'll group everything together. We ask you what you can afford for a payment, and if it's realistic, we'll write you a loan. We also, to kind of piggyback off of the auto loan, if you currently have a car and you've paid on it for a while, Kim says if there's some equity in there, equity is how much your car's worth minus how much you owe. That gap right there is equity. So we can actually put it back on your vehicle and pay off your debts with the difference.
Okay, interesting. That makes a lot of sense actually. So is there ever a time where it's a bad idea for someone to consolidate debt? Like, can it hurt their credit score, or maybe they it just for whatever reason doesn't make sense for them to consolidate debt? Do you ever run into that situation?
My personal opinion on that is if you have something that's interest-free, it might not make the most sense to come to us, because obviously we charge interest on the loans that we write for our members. Student loans, that's another one where the student loan program, there's websites out there that you can go consolidate all of your loans within it. And the student loans they're flexible, right? Many different payment programs. We have one payment program, right? So you write it for a certain term, you're going to pay us a certain dollar amount, and you pay it down to zero. So it doesn't always make sense to consolidate maybe interest-free stuff or signature loans. If you are paying off stuff at a fast rate and it's going to be zero fairly soon, it might not be in your best interest to consolidate it. what we really pride ourselves on here is giving you that financial counseling, right? So if it doesn't make sense to you, the member, then we're not going to do it.
Awesome. Well, that's good to know. So I guess what really happens to those loans that you're consolidating then? What is that process? Are they something that you're still making payments to everyone, or it's all one place? Like, how does that work? Talk a little bit about what happens to those old loans.
Yeah, I can talk about that. So it kind of depends on the situation itself, but what we like to do is pay off the either loans or credit cards that you have and make it into one payment. So we would either pay off, First Alliance would send a check to those other creditors, and then you would only have to pay us. And then if it made sense, we would close those other cards. But now with our restructuring, it might not make sense to pay off and close those other cards. So sometimes we like to keep the other cards open to help your score, your financial score go up. Troy, can you help me?
Yeah, so what Kim's talking about in our restructuring, we've gone to a little bit different model now with our lending process. So if you want to call it loosening up, maybe we've loosened up a little. We've always been pretty open to people, but we really encourage people who might think that they're credit challenged to come on in and let us know what's happening in your life. And really, if it makes sense, we're going to try to help you, right? So we're member owned. So all of our members that obviously bank here are owners. So with that being said, we wouldn't be here without them. So it's our philosophy now to now help them however we can.
Awesome.
So
Awesome.
you should not be discouraged.
Yeah,
Here's the bottom line.
so kind of what you're saying is if you think you have a low score, you should still come in and talk to you guys. It's never a bad idea to just sit down and talk with you about any credit issues that you think you might have or anything like that.
Yeah, and even with just sitting down and talking with us, we wouldn't necessarily have to pull your credit either. So if you would call in to one of our member service representatives, we would maybe set up an appointment for you, and then someone would talk to you before pulling credit if you were really worried about that.
Okay. Awesome.
I'll just piggyback on that a little bit. You know, one thing that again we take pride in is the financial education of our members, right? So all of our lenders here go through various trainings, whether it's internal or external for that matter, just to, I guess, what do I want to say? Fill our toolbox full of different ways that we can help you. So if we're talking about debt consolidation, a lot of times we will partner that with a budget. So that way, when you come in here and you're talking to us, you actually know what you spend on a month-to-month basis. And if you're living within your means or not, because if you're not living within your means, how do you really know what you can afford to pay to get to that next level, right?
Sure,
That
sure.
700 club.
Yeah, so kind of piggybacking on what you were just talking about there. So once someone does complete a debt consolidation loan, what's some advice that you kind of give to members to help them stay on the right path afterwards? You kind of talked about budgeting, but there's probably some other tips or recommendations that you guys probably talk about a lot with members to keep them on that straight and narrow and keep them from having to do debt consolidation again in 5 years.
Yeah, so kind of what I talk about with members is keeping on that budget path and knowing what they spend their money on, really. I mean, I personally have had to do that with just recently getting married and having a child, so I understand that it's difficult to kind of understand where all of your money goes, but it's really important to understand that. And then also understanding on how emergencies come up. So if an emergency comes up, how are you going to deal with that? So do you have a line of credit that you can spend, or do you have a credit card that has room in that to spend, or do you have room in your budget to get another loan, or do you have savings for that?
Awesome.
Yeah, very good.
Yeah. So what happens, what would you recommend to somebody who maybe they consolidate their debt with us or with anybody, and they find out that, you know what, that payment is still a struggle for them. They maybe didn't anticipate it, or somewhere down the road, like you said, that a life change happens, they lose a job or medical issues. What should they do at that point? They've already consolidated all their debt. They brought down that payment as low as they can. What should they do next if that's their situation?
Well, I think, go ahead. You can.
I was going to say definitely come to us. We have excellent people who can help us with lowering payments or changing a due date if that's what's needed. Usually it's changing a due date or lowering a payment by a little bit and extending a term of a loan. We're not, like Troy was saying before, we're not limited on certain things like we used to be. So if we really need to extend something on a loan because of a life emergency, we'll definitely help you out, especially if you're a full member here, and we really appreciate our memberships and the people who come to us all the time.
One thing that can really help that, I know it's really intimidating to come in and ask somebody for money. Whenever you get a loan, that's what you're doing, right? But the more transparent you can be, the more open you can be with that person at that time, so they can paint the picture of what's going on. I think that's the number one key to figuring out what is right for you, right? Yeah. We don't know what's going on in people's lives unless you tell us, right? So if things aren't adding up on paper, because that's what we go by, is paper in your story, right? But if you don't tell us a story, we have to go by paper. Yeah. So with that being said, there's a lot of gaps that happen, you know, and life-changing events, we're all human, right? Yeah. Bad things happen to really good people.
Yes, they do.
Right?
Exactly.
Awesome. So, about the difference between maybe a payday loan, you see a lot of advertisements for payday loans versus doing something like debt consolidation. I don't think there's maybe a lot of people that understand the difference between the two.
Sure. So a payday loan is you go to a place and you get the funds that you're seeking. You agree to pay them back the next payday you have, hence a payday loan. And then at that time, they're going to charge you a certain either fee or an interest rate, right? Typically, it's a fee. You borrow $100 on payday, you give me $125, we're square. What that can do to you is essentially start a large spiral, because you're paying $25 to get $100. Well, next payday, you might not be able to afford that, so now you got to get another loan you pay it, but now you get another one, right? And you're always just behind the eight ball. So what we really encourage, like when you come in and talk to us, is our member service representatives will sit down and talk to you. They'll make sure that, hey, rainy day fund, call it a credit card, call it a line of credit. Make sure you're set up for that. If you need that quick $100, our line of credit, you can advance from it, you can pay it back, use it as a payday loan. But it's 3 cents a day on $100 you borrow,
right?
Not $25 per paycheck, right, or whatever the fee is that they're charging.
Not big difference.
Right. So if you do have payday loans out there, it might be in your best interest to come in and sit down and talk to us. Be humble. We're humble, right? Say, here's what I have going on. I'd like to pay them. And then you pay our interest rate, which is way less than $25 a paycheck. And then get it square. While you're in there doing that, we're going to ask you the right questions to make sure that you're safe, you're sound going forward.
Awesome. Good explanation.
Definitely. Yep.
Cool. All right, and for anybody just joining us, feel free to put in the comments any questions you have for Kim and Troy about debt consolidation, and we'll answer them as soon as you post them, I promise. But while we're waiting for more questions to come in, when you do a debt consolidation loan for a member, do you require them to go through any kind of credit counseling, or is that ever kind of a give? a give or take scenario? Like some members need it, others don't, or how does credit counseling and debt consolidation go together, or are they completely separate things? Maybe.
Yeah, so I'll answer that. So we do have a debt consolidation program that we partner with, but it's not required to do. Personally, I think it's a great program that we have, and just to call them and talk to them, it's free. It's called a census, and we have a link on our website, and they actually really have great budgeting tools and other programs that they can use for you that are for free. They have a lot of different, I don't know, are they like memos kind of?
Yeah, so it's actually called Excel. Census
Yeah,
is
yeah,
IRAs.
Excel, yeah,
Right.
yeah, Excel,
But yeah, you're right. You're on the
Mhm.
right path.
Yeah, so they have a lot of different things that we can use with them. And actually, when I sit with members, I pull up the site with them, and I show them how to get to the site from First Alliance's website. It's on is it on the extra tools? I think. Now that we've
member
changed our
benefits.
website, I'm not really sure of everything. But yeah, it's the member benefits that it's under. But yeah, it's a great tool to use. And yeah, we don't require anyone to do it. We put it out there for them to use for their own benefit.
Do you have anything to add on to that? Troy, or?
No,
Okay.
I mean, I guess yes. Excel is great. It has a whole bunch of, like Kim said, worksheets. So if you're going to buy a house, there's a worksheet out there. We have a budget, a very elaborate and monthly budget on our website, which is awesome, and it keeps track of month by month, right? Excel has a budget sheet that's a page, right, and is a quick snapshot,
Sure.
right? It's a one-time look at what you got going on, not necessarily a tracker. But yes, they have many programs out there that are available for all of our members.
Awesome.
And it's free, which is a great program for us.
Free
Yeah.
is always good. Yeah.
Yeah.
So I'm going to kind of back up a little bit and kind of go back to the beginning when I first asked you what debt consolidation is. So there's a lot of different types of loans out there, and some of them have fixed payments, and some of them have more like flexible payments, kind of like a credit card. Can you talk a little bit about what the benefit of a fixed payment would be? Because that's what you would get with a debt consolidation loan, is a fixed payment. So what is the benefit of having a fixed payment versus a fluctuating payment like you would with a credit card?
Sure.
Benefit of a fixed payment is you're going to get all of your payments paid off sooner, or all of your debt paid off sooner than something that would be flexed. Also, with the fixed payment, you're going to have a better rate. So with doing something that's fixed, it's a better rate since we've seen prime rate raise a little bit. And First Alliance Credit Union bases their rates on prime rates, which is the federal rates.
Awesome. Okay.
Yeah, when you talk about a fixed rate, it just means that member, whenever they get that loan, they know that they're borrowing X amount of money for X amount of time, and here's their payment, and here's their interest. When you don't have a fixed interest rate, you're at the mercy of an index, whatever that index is. We use prime for quite a few things.
Okay. So it just kind of keeps it consistent, so you can plan better
Right.
around your payments. Okay.
Correct. It helps you with a better budget.
Perfect.
Absolutely.
So we actually did get a couple questions in. So from Evan, thank you, Evan. How do you avoid debt consolidation and scams? This is a really good question. Should you always go through a credit union to make sure that you're getting a trustworthy debt consolidation loan?
Sure, I can answer that. In my 12 years or 11 years, I guess, that I've been here, I've come across a couple of members who were part of these debt consolidation programs, I call them. A lot of times they'll come with a fee, an administrative fee, because they're taking money from you, or they're not taking money, they're collecting your money, and then they're making your payments for you. A lot of times what they'll do is they'll negotiate with the creditor to come up with an affordable payment, and then they just administer all that. A lot of times what I've seen in the 4 or 5 that I've done is they either have a fee or they charge you an interest rate, and that interest rate typically is higher than our highest interest rate.
Okay.
The highest interest rate at our credit union is 17.99.
Okay.
Right?
So above 17.99.
Then you should come to a
Yeah,
credit union.
okay.
Not only that, but we're personal. A lot of these debt consolidation companies are national chains, or they're out there, right? So you're on the computer or you're on the phone talking to that person, and
Sure.
there's that personal contact. So if you have questions with us, walk into one of our branches.
Perfect. Awesome. That's a great answer. We have another question from Haley. Thank you, Haley. What are the cons of doing a debt consolidation loan with a debt relief company, such as, like, if you had already financed with them, can you still do a debt consolidation with First Alliance? So if you have debt consolidation with another company, can you do debt consolidation with First Alliance, I think is what she's asked.
Sure.
I can take that. Yeah.
Yeah.
So that really depends on the contract that you have with that other company. So if you have a contract with that other debt relief company, you'd really want to read it yourself to see if you have like a buyout on that. If there is a buyout, a lot of the times it's a really less interest on the money that you would pay with us. A lot of those companies, like Troy was saying, will pay you an additional fee or an additional rate to pay off those other companies that you owe. So if you say you owe Capital One $500, that debt collection company will say, hey, we'll make sure this person pays you $200, but then the debt collection company will ask you for $300. Kind of like that. Not exactly like it, but that's sort of an example. So you want to ask that other company if there's a buyout, or also you'll want to ask that other company if there's a early penalty to pay off that loan early. So sometimes companies will have an early payoff fee.
Yeah, a lot of times it's known in the industry as a prepayment penalty.
Okay.
So, yeah, the bottom line is, I think, is you need to read your contract. So if you're already on the hook and you've paid the upfront costs, it might not be beneficial to come to us and pay more interest if you've already paid it upfront.
Right.
Yeah.
Okay.
But we'll obviously, if you come to us, we'll look at everything that you've signed, and we'll be honest with you and tell you, hey, it is good or not good. Just come to us and we'll be honest with you. I think that's what Troy and I have really proud ourselves on doing.
For sure.
Both of us working here for over 10 years. So.
Right.
Awesome. Well, you guys have been awesome answering all of these questions, and it doesn't look like we're getting any more questions dropped into our comments. I'll just refresh this really quick one time to make sure. Yeah, I'm not seeing anyone new. So if you both want to just give some maybe last thoughts on debt consolidation that you want to share with our members who are watching tonight, and then we'll just wrap this up. So any last thoughts you want to make sure that you share tonight?
Yeah, my last thought would be, even if you don't think that you need a debt consolidation, but your mind is kind of like in the background, like, oh, I have 5 different payments to a bunch of small different credit cards, it really might be beneficial, and you might not even have to close all those credit cards either. Some of the things that people worry about is when they do a debt consolidation is having to close all of the different credit cards that they have for emergencies. We're not necessarily going to do that for you. What we'll do is we'll look at the best interest for our members, and if it's not closing those credit cards, we won't close them. If you want to keep it open, we'll definitely do that for you. or we might get you a credit card that has a lower rate, which usually First Alliance asks for you too.
Absolutely.
Troy, anything to add?
Yeah, just in closing, I would like to say there's no two situations that are the same. So it's, all these answers are kind of canned, and it's hypotheticals that are happening. So I would just like to say we have open minds here at the credit union. Please don't hesitate to either, we have a contact center, you can give us a call, you can apply online, or you can come in and see one of our friendly faces.
Awesome. So we actually did get one more question in from Carissa. Thank you, Carissa, for submitting that. She wants to know, if credit cards have brought your credit score down, is debt consolidation still a good option?
Sure, I can answer that. A lot of times credit cards will bring your credit score down because of what is known as capacity. So hypothetically, if you have a $1,000 credit card and it's at $950 for a balance, that will actually bring your credit score down roughly 95 points.
Wow.
Right? So if you were to consolidate that into a fixed loan, and when I talk about capacity, that has to do with a revolving credit, anything that you borrow from payback. If you come in and get one of our signature loans or refinance an auto loan with us, that thing balance goes to zero, and you gain those points back.
Awesome.
Yes.
Okay. Anything to add to that, Kim?
No, that, sums it up.
Perfect. All right, we'll just do one last check, make sure we don't have anybody waiting to have their question answered, and I don't think that we do at the moment, so we'll go ahead and wrap this up. If you do have any questions, if you're watching this video later on after it's after we're off the air, feel free to just post your questions in the comments anyway. We watch our Facebook page all the time, and we'll be happy to answer those for you at a later time. And if you are seriously considering debt consolidation, I encourage you to go out to our website, and right on our homepage you can download our debt consolidation calculator. That'll help you kind of get a really good feel for whether or not debt consolidation is right for you. And then once you have completed that, you can come in and talk to one of these guys, and they'll help you out and get you on the right path. So thank you so much for joining us, and thank you, Troy and Kim. You did awesome, and
Thank you.
have a good rest of your night.
Thanks, guys.
Bye. Thank you.